regulated entity. So over to Ashish. You just have say hello hi to everyone. And
Yeah, hello.
Sir, you are on mute.
Yeah, thank you to Midas Wealth for arranging this call or a Zoom meeting basically on a Saturday afternoon. And thank you to you all.
गावच्या सरपंचाचा मान आहे त्याला आणि आमच्या पवार लोकांचा मान आहे
Yeah, I think I'm audible. Yeah. So I said thank you to all of you for sparing some time on a Saturday afternoon and be with us to basically discuss something important as far as the markets are concerned, because we've seen a lot of volatility. So this is an opportune time for all of us to be brainstorming. Yeah. Can you hear me? Yes. So can you go to the presentation, please? So there's a kind of presentation. I've tried to jot down my thoughts entirely into a session which would probably last maybe 40 odd minutes, but it will be important for all of us where we are in the markets and what to be done. That's what we've chalked down here. So as Ramkumarji introduced, my firm's name is InvestQ. We are based in Pune. I am having about 22 years of fund management experience in mutual funds, insurance companies, and since 8 years, I'm running the PMS and advisory practice at InvestQ. And the objective here is to take you all through our thoughts as to where we are in the markets and what looks like ahead. So the topic for today is divided into three parts. So as we've seen that a lot of geopolitical activities happening, and our topic for today is geopolitics, economic impact for India, and opportunities that we see in this. And the markets have actually reacted to all the kind of incremental bad news that's been coming for across the globe and for India as well. So it's been a kangaroo type of market. It's not been a bull market, not been a typical bear market, but at every point there have been ups and downs, and it's been like a kangaroo market which has been up and down. So what I'm trying to say is it's not a dead market where people are not reacting, no one is buying, selling, but people are looking for opportunities to go for buying. But at the same time, the news flow is such, the impacts are such that the stocks have been sold off also. So today we are seeing people sitting on the sidelines, and we'll discuss how this goes. So next slide. Can you go to this next slide? Yeah. So this is a standard disclaimer because we are SEBI registered, and the views are that of as InvestQ PMS, and that has to be taken into stride with all the disclaimers, and that this is not an advice, but this is a general session for understanding. Yeah. Next slide. So this is my profile that we've discussed. Ramkumarji explained. I'm a chartered accountant and worked at different levels of fund management and advisory in the last 22 years. And I've been part of mutual funds, insurance companies, stockbroking outfits, advisory to FIs and domestic institutions and HNIs. And past 8 years at InvestQ, we are running a PMS with stock picking, basically being the kind of approach where we go into depth of different companies, and with all the experience that I've had with meeting promoters of companies and management, we try to build a portfolio around what can give us alpha over the next 2 to 3 years. That's been the kind of approach that we've taken. Yeah. So that's been the journey of InvestQ. In short, we started in November 2017 as an advisory platform, SEBI-registered advisory, and we have a PMS with so the total AUM between advisory and PMS is around 400 odd crores that we manage today, and it is with channel partners or good knowledgeable people like Ram Kumarji that we've been able to garner this AUM and do justice to clients' money. So next slide, please. Yeah, so this is the flow of today's discussion. Interesting topic on geopolitics because there is very less understanding of why things are happening the way they are happening, because there is certain story behind why Mr. Trump is behaving in a fashion that he is and what he is trying to achieve by doing all this. So we'll explain in a slide. The second part is how has the war and other geopolitical developments that has impacted the Indian economy, and the markets have been through a lot of pain in the past 18-20 months, and we'll show how the different segments of the market have been impacted. Then we'll go to the analysis and conclusion based on these three topics. And then we'll go to the opportunities that we see as medium-term investors. Because the crux of it all, I'll tell you that we have been through a lot of pain, and now we are seeing the markets settle down. There is a sense of anxiety, but at the same time, we are seeing buying coming into stocks at these prices which are 40-50% down for most of the stocks. So I'll take you through data on all these. So in one slide, in a summary, I've tried to capture what is happening around the world. So I'll tell you a story. Maybe you can refer to the data here, but there is a story kind of that is there behind what is happening. So as we all know that US is the most powerful nation in the world today, and that has been built over last 40-50 years. After the gold standard was removed, the dollar became the reserve currency of the world, and every country trades in dollars, and that gave US the power to become the pillar of the world. So US basically is a demand generator, and the entire world was a supplier to the US. That's the system that we have worked for past 40-50 years. So China has been a dominant force in supplying everything at low cost to US, Europe, and across the world. India has exported pharma and IT as the services and manufacturing part. Then we have textile exports to US. So in crux, the entire world is a supplier. The US consumer is the consumer or demand generator, and that's how the cycle of the world was going on. That the US keeps on consuming, the world keeps on supplying, and the economies of everyone keeps on getting bigger and bigger. Now, how the US has been funding that has been that they have been printing money, or they have been basically papers against which the government has been borrowing, and that money was being supplied in the hands of the US citizen, and that led to an entire consumption cycle. And these countries like India, China, etc., had come to a certain standard, with China becoming huge surpluses on the money that they had, and they kept on parking in US treasuries, and then this entire cycle kept on going. And today, the situation that has come in is that US, after the couple of COVID shocks, they printed money big time to ensure that the economy didn't slow down and go into recession. And the US has a huge loan to pay to the world and to their investors, which is about 130% of GDP, and the quantum is about $38 trillion. So in context of our economy, we are at about $4 trillion as an annual GDP, and in that context, if you can understand, US is $38 trillion in debt, and which is 130% of their GDP, which is an alarm kind of that has rung, because when the biggest economy of the world goes into stress, it has to stop doing business or consuming the way that it has been, and that's why there is a urgent realization that if this debt to GDP goes higher, and the interest burden on that debt, so about 40 trillion of debt would mean that even you take the base case, you will have say $1.5 to $2 trillion of annual interest payout. which is non-sustainable for even a country like US, because they have been running deficits. Because when you are importing more than what you are exporting, you are having a deficit in the money that is coming in and money that is needed to support your expenses. So that deficit has led to the fact that US is under tremendous stress to bring down the debt. But otherwise, what happens is if you look at the historical data, countries which have reached such kind of a stage, um, I mean, 90% of the situation, either they have had to go through a very pressure kind of a situation for the next few years to bring down the debt, or they have defaulted on the debt. That is what happened. And US or Mr. Trump is trying to protect the US from that. So, in a nutshell, it is a war not between Iran, Israel, or Venezuela, or any other country and the US. It is a war between US and China for the supremacy, because China has become one of the biggest country in the world in terms of their supremacy on manufacturing, their low cost, their supply of everything that they do in terms of defense, in terms of AI, they are coming out now. So it has become a big threat to the US for its supremacy to the world. And there is a power tussle that is going on between China and US. And what US is trying to do is two fronts. One, it is trying to cut the allies of China, or trying to stop China from getting bigger and bigger. And one of the methods would be to cut the allies by ensuring that the energy security, or oil and gas and um, other things, metals and etc., that needs to be with you if you have to cut the other countries' strong hands. So that is what is happening. So Iran or Venezuela are small parts of the big picture, which is US versus China. And and India actually is in a crossfire, because we are nowhere party to all this. But what has happened is that because of this war that is going on, oil and gas prices have shot up because of availability issues, because a few facilities have been destroyed, and India is a 80-90% importer of oil. So we have come in that zone, and the rupee has been under pressure because of several reasons, FI outflows, etc. So India is no party, but between the US and China, most other countries are suffering. That is the bottom line. And this might go on for a few years, because the US will keep on doing one thing or the other. The tariff was a part of the US strategy to ensure that they um, make exports to the US expensive, and also in the meanwhile collect some tariff which will help them fund their deficits that they have. So they are collecting money from whatever coming into US, as well as they are trying to ensure that there is some production that starts in the US, because US has been a net importer, so they want something to come up internally in terms of services and production. So this is in a nutshell. This will keep on going for quite some time probably. But in this volatility, the markets will have ups and downs, and this is the volatility with which most of us will have to live, because the world order where US was a dominant force, that probably is coming to an end, or you can say that it's in the very shaky ground right now, and the world will have to adjust to that. So this is the geopolitics that is taking place. Next slide. हाँ हाँ AI का बोला मैंने. Yeah, so we've tried to put down few facts on where India is, because as you might be reading in the newspapers, etc., we were not too much impacted by the tariff movement, tariff related stuff that was happening, because it was limited to the sectors which were export oriented, which was hardly anything percentage of GDP. On the manufacturing front, it was like textiles were getting impacted, or some other small industries which were exporting. But today, with the Iran war, what has happened is that Iran has bombed the entire Middle Eastern allies of US, and because of that, as you have been reading, Strait of Hormuz, basically 20% of world's oil and gas transportation takes place from there, and so that has been disrupted to a large extent. And secondly, there have been facilities in the Middle East like Qatar Gas, and there have been some facilities in Iran which have been bombed, and those facilities have been damaged to an extent that in the near term the production of LNG and oil both has been impacted, and kind of 20% of the world's LNG supply comes from Qatar gas, and about 15 odd percent of that capacity has lost production, and it will take some years for it to come back. So what this leads to is an increase in the price. So I have put two things here. One is how as a country we get impacted, and how which all the industries get impacted in this issue of oil, LNG, LPG, metal crisis. So, from a fiscal standpoint, India is about 75-80% imports, or more than that actually, in terms of oil, and gas is also imported, and all the petro products are made from this. So it has impact on most of our industries and our daily consumption of the normal public. So as you see, Brent crude oil has gone up by about 75% in a year. And in a country where almost 80-90% is imported, it means a lot where 75% cost increase happens. Then rupee has been a problem, that rupee has seen a fall of about 14%. And if you multiply both, where you have to import at 75% higher cost and also at 14% higher rupee depreciation, that has a big impact on the fiscal calculations, the government budgets actually. So inflation will increase, is expected. Inflation has been around 2-3%. Now it's expected it will go above 5%. That is what is a cause of worry, as well as the availability of oil and gas for industry and domestic usage. So this is all negatives I'm telling you, but we'll come to the positive later on of all this. So current account deficit, which was around 1%, that is likely to go around 1.7%. These are the numbers, and the government has given they've reduced the taxes on petrol, diesel, and many other things to kind of very low level or zero. And government is sacrificing. Fertilizer subsidy they have increased because a lot of fertilizer inputs were coming from abroad, which have been impacted. So all this is kind of a readjustment that is happening, and effect of that on GDP growth is going to be there, because so last 2 months we've been talking to a lot of companies, because the corporates are in the center of everything here. And when we talk to textile companies, when we talk to pharma companies and metal companies, etc., we've been hearing that as of now, till Q4, situation is fine. They had the raw materials to basically supply for the usage for export or domestic production. But incrementally, the challenges, if the war situation does not subside, there would be one, pricing impact, because the raw materials have become expensive. Second is availability impact. If across different industry it is different, if the availability does not improve, then there is export import impact, because goods are not able to move, so your the business might slow down. So these are the few things, and the freight costs have gone up. So these are the few things that are happening. Most of the impacted sectors are like airlines, which is directly ATF price has gone up by 30%. Packaging cost has gone up for FMCG and other sectors. Chemicals, the feedstock has gone up. Logistics has gone up. Building materials, Morbi is the manufacturer of a lot of building materials, especially tiles. That is in closure, because they operate on gas, and that's not there right now. So these are the impacts which will be seen in first quarter of next year, as in Q1 of April to June quarter. Yeah, please go on. This is, yeah. So this was India impact that we are seeing on the ground when we talk to companies. As of now, things are fine, but if the availability sort of does not ease, or the price does not ease, if the war situation does not ease, we'll see impact of that on the GDP growth in the next coming couple of quarters, and corporate profitability as well. So markets have markets are smart. In the past 20 months, for every kind of every kind of disturbance that has come. So we've jot down a few what the market has gone through in the past almost 2 years. There were valuation concerns. Then there was a GDP number which came to around 5%, which was a shocker. There was a sell-off. Then there was a DeepSeek related. If you remember, there was an AI trade sell-off. Then Trump tariff started. There was a correction, and then again the markets came back when the tariffs were set to a lower number. Then AI impact on IT, and now the war in the Middle East. So these have been several events which one after another has been coming, and the market has been absorbing that. And there have been staunch FIIs selling because FIIs, when the rupee goes into a depreciation mode, they have a big challenge because their gains get cut off. And there is no reason for them. There does not be a reason for them when the valuations are high. And probably when they are getting lower valuations at other geographies or other companies across the world. So FIIs have been continuous sellers for the past 4-5 years. And the speed of selling or the quantum of negative that have been high. So the markets have been through a lot of pain, and still, I would say that if this kind of scenario happened 20 years back, when FIs were the key runners of the market, our markets would have been down by some 30%, 40%. If I were to go back to 20 years prior. But today, the domestic money that has been there, the mutual funds or insurance companies or some other institutional money, that has cushioned a lot of the fall and in the larger companies, large caps and maybe mid caps to an extent. But the smaller companies have seen a drawdown because there the mutual fund holding is less, and they're typically HNIs, etc., and the retail is the holder, and that's where we have seen the sell-off. So, as I said, markets have been through a lot, and that pain is already in the price. So I have tried to put some context here to the story that markets have been through a lot around last 20 months of chart disease. So you see that Nifty 500 is around 14.5%, 15% kind of lower in this 2-year period almost. A median stock is down by around 30% if you take 1,000 crore plus market cap companies. And we would have experienced that in our portfolios as well. If as individuals we have smaller companies in our portfolio by market cap, they would have seen drawdown of say 50% also, 50, 60%. There would be some which are down by 30, 40%. So it's been the same. And return differential between larger companies and small companies is like 15, 20% at least in terms of fall. The index does not show the true picture because the fall on the broader market is very, very high. So the market has adjusted to the negativity that has come in across in terms of shocks. This is another angle of looking at it. Large caps, which are companies anywhere between 1 lakh crore and above, which is the top 100 companies. This is SEBI definition. Top 100 companies being large caps are down by around 20%. The mid caps, which is about 1 lakh crore plus, 30,000 crore to 1 lakh crore of market cap. Those 150 companies are down by about 25% in a median average company. And the smaller companies, if you go beyond 3,000 crore market cap, which is 3,000 crore to 30,000 crore market cap, those are down by about 31%. Now, if you go even below 3,000 crore ke niche, the drawdown would be something like 50%, 70% also. So we have not counted that because typically those don't form part of any PMS or portfolios actually. So in a nutshell, this is what I'm trying to see what from here, because economy has suffered and stocks have suffered. So it's a balance. And we think that around 70, 80% of the pain or more than that is already in the price. What from here? India needs this war situation to basically ease out a bit, because for us, the availability may not be a problem. We are in good books of probably Iran and our supplies are coming, but the availability of gas has suffered, the quantums that are coming out. So the prices are high. So that is one thing. If it streamlines, it will be better. Even otherwise, the world will become used to paying $100 of oil. Again, 60, 70, inflation will come and things will get adjusted. Secondly, movement of goods needs to be normalized, because when we speak to companies, there have been instances where the product is not being able to ship outside, or the containers were not available or something like that. the war needs to end. If there is a news around any of these things smoothing, or if the war gets over, which also seems to be the intent of the US, because US doesn't want war. They can't spend another trillions of dollars in war funding. Also, Trump has to face the midterm elections, which are in November, and he's getting unpopular with the voters. And if there is if all this goes negative, if there is a killing of US soldiers, or something like that happens where they are on the back foot and his decisions are seen to be wrong, he might be out of power. So all these are positive possibilities from a world macro point of view. So, and bond yields have gone, I mean, for temporarily it crossed above 5%. Bond yields means basically the interest that you pay on the debt that the US has taken across. It has gone to 5%. US was at 2.5%. That has doubled. So first you have $40 trillion of debt and your interest cost is going up. That is a alarm, basically. So that's why there are these 2-3 things will keep Trump under check, and we might have some positive news on the war front, as he has been saying, 2-3 weeks that these things will end up. So we have seen the worst. Probably something better happens from here, and the valuations are very reasonable. If you look across the markets, there are companies which are at single-digit PE. I mean, I've not seen single-digit PE for a long time in India, where growth has been phenomenal also. So we have not seen a slowdown. There are companies which are doubling, tripling their business over the next 3-4 years because there is demand. They are market share gainers, and still the stocks have become 40-50% cheaper. So ideally, I would be a buyer for these companies, and I have been buying in this kind of fall. And now incrementally, we are putting incremental capital to work. As the sentiment improves, or some positive news happens on the macro front, on the war front, we think that there are enough buyers to take hold of stocks. So as we are looking to freshly enter into the markets, most of the other fund managers, mutual funds, or even institutional individual investors, PMSs, everyone is on the sidelines with money to park if they see a whiff that the market has settled and there is value in those stocks. Because I think there is a lot of value in some of the stocks where growth for the next 4-5 years seems to be phenomenal, and stocks are at single-digit PE with a 50% cut in the price. So all is not lost. As I said, that I gave you the entire picture of what negative has happened, but then it is in the price.
Just 1 second. So please put up your questions on the chat box. Once we finish the presentation, we will take the questions from the chat box plus as well as from the person one-to-one. So in between, if you have any questions, please put up in the chat box. Thank you. Please continue.
Slide. Yeah, so someone was asking on the chat which sectors are better or not.
We
Actually,
will continue once you finish the
yes.
sorry.
Yeah, so we have a slide
on that.
that's now.
Okay.
We'll finish that here.
Okay.
Yeah. So if you look at the overall market construct, the near-term winners or maybe near-term parking places are different, and the next 2-3 years of money making is going to be a different approach actually. Because what we are saying is that across sectors, we see that either because of the bad news, the stocks have halved, or because of the general market fall, the stocks have halved. There is nothing changed in the growth path of those companies. So you're getting stocks at a 50% discount many places. In terms of sectors, if you have to hide or maybe which is better in the current, it is like pharma and healthcare because it remains unscathed by most of these issues. Pharma is a need across the world, healthcare is a need. That is one. Second is, since oil prices have gone up, the companies like ONGC, upstream companies which are in production, those are better ones. But then the government will try to monetize that and subsidize the pain that has come because of the higher oil prices. Third is electrification. So across the globe, in US, in India, in Europe, there is a phenomena of more and more energy, basically electricity production and consumption, because there is a boom that is expected in manufacturing in India, and manufacturing has been increasing, consumption of power has been increasing, and there is a need to move to renewable power because oil, as it gave a shock, India is 80-90% importer. So renewable energy is one theme Second is the entire power generation basket that NTPC is putting up plants, Power Grid is putting up lines of distribution, because there is a government agenda till 2030. They have to achieve X, certain X of the power production that was there. Because in the decade of 2010 to 2020, there was no investment in power, but the consumption was growing at 7-8%. Now the consumption, now the government has taken up the challenge that power production needs to increase. So you have the entire value chain of power, that is power plant people, then the transmission guys, cables and wires companies, transformer companies, renewable power companies, solar, wind, etc., etc. You would have seen these stories over the last 3-4 years, but this is a sacrosanct theme for the next 3 years also. Tech platforms, as you know, that because of this AI noise that came in, a lot of the tech platforms got butchered by say 50% plus 30, 40, 50% has been the normal drawdown. So there are opportunities there also. Which of the tech platforms that won't be impacted by this? The promoters are good and the runway for growth is high. Those are a few segments of the market where one should look at ideas. We also in our PMS have ideas across this spectrum. Defense, it is a need because every country is fighting again for its survival, and defense has become a very big need. Government is also allocating bigger and bigger capital from their budgets to defense. Actually, earlier infrastructure was the kind of preferred sector, and last 2-3 years defense has just zoomed out because the external issues are just too much to handle, and every country has to become self-reliant on defense, and India is on the forefront of that. Railways is one. So industrial capital good also, because if industries have been doing well, defense, railways, etc., has been doing well. Everything needs automation to plants have to be put up. There is a capex going on, so this is also decent. If I have to bifurcate the market, services looks to be in a reasonable spot versus manufacturing today, because as I said, manufacturing may in the next one, this is a very short-term view, that the next 3-4 months, manufacturing will show where issues are happening, which are not envisaged because of the supply chain disruptions. So services may to you don't need raw material, etc., to come on time and all. So services sectors, those will be less impacted or not impacted by whatever is happening around the world in terms of disturbances. And lastly, one has to look at bottom up high growth companies at beaten down valuations, as I've been repeating in this call. That is a very important aspect. We are finding ideas which are at single digit P with high growth, and these are the companies which were trading at high valuations. So now today, because of the scare, those are at low valuation, but we are already seeing buying happening in those companies and stocks have started to come up. So that is one pocket. So lastly, we hunt for ideas across these themes. Strong tailwinds like we have in power or defense, high growth compounders like companies which are say 25% compounding annual growth. There are decent number of companies doing that. Upswing in business cycle, everyone looks for the next sector which will have an upturn. So turnaround companies like Tata Group had a turnaround some time back. There are some other, so Britannia, etc., have been turnaround companies. So anything, if you get any turnaround companies where because of the management brilliance or initiatives taken by promoters, the next 3-4 year path looks to be in a different shape, the market gives them higher valuation. Structural improvements in business or financial parameters. So if some company goes from 150 days of debtors to suddenly says कि मैं तो अभी cash मतलब पैसा लूंगा उसके बाद माल दूंगा. So there is a valuation increase that happens for that companies. We have seen those companies like APL Apollo taking those bold calls, KEI Industries taking those bold calls, and they have benefited from that. Under research, न्यू टू मार्केट कंपनीज. बहुत सारी कंपनियां नई लिस्ट होती है, and then platform companies have been one such addition for the last couple of years, and that's been a segment which has just zoomed off in terms of performance. Special situations, demerger, merger, etc., we have to study them carefully and find ideas there. Sanofi was one demerger that happened recently. There are many others that happened. Glenmark, I think, was there. Growth available at reasonable price, that is a common thing that one looks for. in today's market, GARP is something, or growth at very reasonable price is available, and we should be looking at that. So these are the themes where one looks for ideas. So lastly, this last slide summarizes, this is some data since 2000 until today. We've seen that most of the crashes came when valuations just zoomed off and then crash happened, but then markets adjust to it and then again buying start, because we are a country which is growing, and uh, there is a liquidity typically comes either domestic or foreign liquidity, and stocks go higher. So if you look at the last kind of fall, which is the Middle East crisis, we have seen a big dip, and we might be in for the next 2-3 years, which can be better because we've already suffered 2 years of pain. Maybe another 6 months, we don't know. So these are the quotes from the greats. This is nothing which I am saying, but every great investor has said that when everyone is selling, you should have the guts to buy if you think those companies are going to survive and grow. There is no rocket science in that, but it is very difficult to implement for people, because when everything is falling, no one wants to put their catch a falling knife. And there's one quote I like: the stock market is the only market where things go on sale and all the customers run out of the store. So that should not be the case. We should be buying when everyone is selling. So thank you for patiently listening. It's been a monologue. Probably something got registered. And any questions, Ram Kumar ji, if there are questions, or we'll take those questions.
We are doing unmute to all, and those who want to have a questions, they do unmute to yourself and ask the questions. And in between that, if some questions will not covered, then I will have some questions from my side. But before that, please unmute yourself and ask the questions.
Yeah. So on specifically on IT, in our PMS, we didn't have IT because typically we like companies which are high growth. The larger companies had 6-7% growth. Plus, we always like the mid caps there, Persistent or uh, other names which are high growth companies. But those have been very heavily priced. I mean, the multiples for those companies were high. So we didn't have much. But in platform companies on the services side, we had companies like CarTrade, which we could, meeting to that company, that promoter, that's finance team, we could understand that capital allocation was good and stuff, and the growth is going to be very high. So we had that. So that like any other IT company, that stock had a decent run, and then the stock fell with the AI noise, like in other IT companies. So in our PMS, we didn't have much of an exposure, so we didn't have a problem. But in general, if you look at, I think that there is a transition that is going on in IT. Talking to promoters and CEOs of these companies, or um, employees in these companies in a senior level, what we could understand is there is a transition that is going on where AI agents will be doing a lot of the work in IT companies, and every company is creating AI agents, which in turn basically has a need for lesser manpower. So, and in this AI um, kind of you can say race. Every day the scenario has been changing with one or the other AI engine being announced, and even clients have been on the back foot ki bhai, when things settle, we will get things done here. So that's a transition where the IT industry is. But at the same time, with this AI thing, the stocks have also taken a beating. We've seen 30, 40, whatever, based on small cap, mid cap, large cap, the correction has happened. So in the interim, what I see in the very near term, what we are witnessing is that, as I said, services look to be in a reasonably better space versus manufacturing. So IT is a service and it has fallen down. So index is showing some signs of buying because immediate results are not going to be bad in IT, matlab, not as bad. So in mid cap IT, there would be some growth that will be visible. So some positions can be held there. So since the correction has happened, that's what.
In supplement to this, as we have seen from last 2 months, IT has hit down very hard, especially those who are in big large cap like Infosys, TCS, Wipro. But at the same time, the dollar has appreciated around 10 to 12%. And बैठे बैठे मतलब अगर हम बोलते हैं तो बैठे बैठे उनका करीब करीब नेट मार्जिन एंड ग्रॉस मार्जिन has gone up without getting more order from the IT company. So last year, 1 or 2 months, IT sector is showing the resilience, and even though the market is going down, the IT is not going down. So can we have some short-term view on IT sectors like the dollar has gone up very far, and the coming results may be impacted on next Q1 results may be good, even though the company is not getting order or not getting the repeated order. So can we this sector is doing the questioning for the overall portfolio? Yeah, connection is stable.
People saw me, he was pointing out that voice.
अच्छा।
नहीं गया।
थोड़ा सा बीच में होता है। Yeah, you.
Yeah.
Yeah.
Yeah, so regarding your point that the rupee depreciation should help, there is no two ways to think about that. When rupee depreciates, exporters benefit, and this is true for IT, true for pharma. So some benefits should definitely come because their top line growth you'll have that benefit coming in. So as I said, that the very near term growth may not be impacted to that extent. It is just the psychology that everything coming in AI is bad for IT. So the market has to live through that. But we are seeing at lower levels there is buying coming in. That's what we are seeing right now. And yeah, I mean that's right. That very near term things look okay.
Any more questions? Please feel free to ask the questions. Vedak sir, any questions? Unmute yourself, please. Vedak, unmute yourself. Okay. Any more questions, or I would continue? Pankaj, are you having any thoughts or some your insight on the market? Pankaj Mugre, just unmute yourself.
Ashish sir.
So I have asked Ashish also whether he tracking the technical as well. So he told me that in the extreme cases, he is tracking the technical chart also when the market is overbought heavily or market is underweight or highly oversold. In that cases only he is looking at the technical chart also. But in day-to-day basis, he is not taking the call on the technical chart, and it is not allowed. I think so. From the SEBI side, because all the wealth creation instrument is having buy and hold strategy. Nowadays, some instrument is coming like short and long strategy, but they are having a different mandate. So, Pankaj, can you have some view on yourself?
Is it echoing?
Unmute yourself. Yeah, Atul Damne has some questions. Atul, can you ask the questions?
Hello, sir. My question is how banking and finance will fare in the near
Please
term?
unmute yourself and you can speak.
Hello, sir.
So Atul Damne has one questions about banking and finance because lastly, in last 15 days, banking and finance has hit very hard actually, and which is the only sector which was performing from last one year. And in the last 15 days, banking and finance has hitting more hard because they think that the inflation may go up, and inflation is having the directly impact on the balance sheet of banking sector. So what is your view on the banking sectors and banking and financial, we can say?
Yeah, so see, banks have been having a very good time for the past 2 3 years. So since second COVID, there were no provisioning that was there because all the provisions came in COVID, and thereafter there was reversal and stuff. So provisions were very low. The credit growth was decent. The only thing was that with the NIMs were kind of under stress because of the interest rate cycle. So there was no differential between performance of private and public sector banks, and that's why we saw that the valuations between of public sector banks caught up from the very low levels. So that's what has happened. However, see, it may depend upon how scenario pans out because see, provisioning should not increase for banks. That is one very important thing. As of today, the corporate growth and corporate this thing is not challenged in terms of because every corporate is very low leveraged. I mean, on an average, corporates are low leveraged today. However, in some pockets where when such things happen, there could be stresses coming in. Maybe in MSME, something can happen, or in lower stratas of the population, things can go wrong on the provisioning side. So that is one risk that market is also factoring, and the expectation that interest rates will remain low because as you said, sir, inflation going high, it kills the possibility of any being interest rates remaining low, probably. So that inflation affects the overall performance of banks and the interest rate cycle. So that is where the challenge is. But on an overall basis, it is not an alarming situation as of now. I mean, as of now, banks typically seem to me to be on an average, say 12-13% kind of credit growth that is happening. And probably if the government wants to escape itself out of this situation, probably it will have to go towards pushing the economy for growth. That all that can happen. As of now, government has taken measures to kind of tax lower, cut down hurdles in terms of export import. All these things they are doing. But if the war doesn't end soon, or these issues remain, then we could see further measures from the government. As of now, we don't see a challenge to owning a certain part of your portfolio in banks. Maybe around 5-7% is okay. We may not be on the 30% as Nifty, but when you are as an investor, 17% is still fine. 5 to 10% is still fine in terms of decent banks where growth is going to be good and valuations are supportive.
Thank you, Ashish. Any more questions? Could I continue as a interview like questions? Because 2-3 questions I have in mind, but first preference given to the audience. Yeah, Manpreet, madam, on questions for portfolio that has mid cap and small cap, it is suggested to hold and watch how things play out in future. So she is asking about the mid cap and small cap her portfolio is having. So should she hold or take some rebalancing uh, from the Manpreet call?
Yeah. we typically look across the market spectrum for ideas, and we are typically bottom up. I mean, if we see value plus growth, even in large caps or a turnaround in large caps, we are fine to own that. We are not a small cap house. We have a flexi cap kind of a approach to the market. And if you look at as the data showed, the fall in the smaller companies has been much more. But it has also been because those had risen to levels where had become high. But in that fall, across the markets, there are ideas, and especially in the broader markets, because large and mid cap is only a 250 stock universe, and market has listed almost 5,000 companies. So those 4,000 plus companies, there are enough companies which have been single digit P, and there is a high growth. So you have to look at every company specifically, rather than looking at mid cap and small cap as a basket. But to answer your question in a framework manner, after the fall that has happened, we think that the mid and small caps probably are placed for better time, because they have already seen 15-20% plus of drawdown, and those where there is merit in buying those, within that pocket is going to do well, because investors will typically flock to those names. Now, whether the buying happens in loads once or buying happens in a staggered manner, that is the only choice that we have. And I think that in today's scenario, I am buying in tranches of say 20-25% over the next 1-2 months as things unfold, because the sentiment has already adjusted to the pain. The incremental expectation is that the economy is going to suffer for some time. And I think that if there is no further any new war or something like that, which we can't envisage, I think it makes all the more sense to go bottom up and start investing. So as of now, with the pain that you've seen, if you have holdings, maybe we can help you review those positions. If those are stocks in your portfolio, you are welcome to share with Ramkumar ji. We'll help you कि किस में positions रखनी चाहिए या किस में कुछ बेचना चाहिए, and you have to alter the holdings that you need to have. That we can help with. But as a portfolio, if you have some schemes in mid and small caps, the damage is already done. So we don't see merit in kind of exiting something at this juncture, because the damage is done.
Next question is Omkar Jagdale. Can rising crude oil price create opportunity for us, and it will mainly increase the cost? So I think he is asking about the crude price rising, so which sector is getting benefit? I think we maybe have that questions. So something is always good for if something happen. So as the rising crude price is maybe a temporary, but which sector maybe get benefit from this or increasing the cost of their product?
Yeah. So as we are largely an importer of oil, and basically as I presented that almost 70% kind of an increase has happened in oil prices. Most of our companies are takers of oil price, and that adjustment has to be done. And it needs, and it's not entirely passed on to the public in many zones. But um, if you ask me, it's a negative for most of the sectors. There would be few which are impacted big time, like Indigo, which is into aviation. Their basic cost is ATF, aviation turbine fuel. So that part definitely there's a negative impact, because they have to pass it on to the consumer, and your air ticket prices are going to go up, and all those things, adjustments will take place. So temporarily it hits the profitability, because any sharp increase, it will absorb to a certain extent by the corporate, and a large extent of it will be passed on to the public. So it has dual impact in terms of demand kill might happen, and your profitability might get squeezed. So largely it is a disrupting factor for most of the industries. As regards the profitability question, I think we covered that the upstream companies on oil, probably that can benefit. But my view is that the government will not let them benefit to that extent. It will take the gains, and try to balance the situation where they are having to forgo the taxes on petrol and diesel and all those stuff that is happening. So large, it's not benefit to. So PVC prices have gone through the roof. So most of the pipe companies, though, certainly there will be a spurt in distributors buying that, because they tend to buy it when it is increasing, and then those calls are taken, but temporary disruption is there. It's not mostly advantageous to India.
Any more questions? So rising the oil price, even though company is getting benefit, but government not allowed to increase the price of petrol and other petroleum product because it create the inflation. तो आप अगर देख रहे हो कि जैसे श्रीलंका, पाकिस्तान, नेपाल में ऑयल का प्राइस बढ़ गया, पेट्रोल का प्राइस बढ़ गया, लेकिन इंडिया में नहीं बढ़ा. मे बी ड्यू टू द इलेक्शंस आल्सो कमिंग इन वेस्ट बंगाल एंड केरला. Another things is that the government is जब ऑयल का प्राइस काफी नीचे था लाइक 65 और 70, तभी गवर्नमेंट को बहुत सारा फायदा भी हुआ है. तो वो फायदा भी नुकसान में जा रहा है. तो गवर्नमेंट टेकिंग हिट एंड जस्ट गवर्नमेंट इज चेकिंग कि ये कितने लंबा चलता है. अगर ज्यादा लंबा चलेगा तो शायद प्राइस बढ़ेगी. तो जैसे मैंने गेल का एग्जांपल दिया, ओएनजीसी का एग्जांपल दिया, प्राइस बढ़ने से गवर्नमेंट कंट्रोल कंपनी है ज्यादातर ऑयल कंपनीज में इंडिया में, तो गवर्नमेंट उसको प्राइस बढ़ाने नहीं देती है. वी आर नॉट 100% प्राइवेट कंपनी. सो the company which is in the government sector, they are not getting benefit even though their price of the product is going up. तो आपने अगर परसों देखा होगा कि अडानी टोटल गैस का प्राइस बढ़ गया लेकिन गेल का प्राइस नहीं बढ़ा था, बिकॉज अडानी इज प्राइवेट एंड गेल इज ए गवर्नमेंट कंपनी. तो गैस का वर्ल्ड वाइड प्राइस बढ़ रहा है, लेकिन आपको अपने यहाँ पर जो गैस प्रोड्यूसिंग कंपनीज है उनका प्राइस नहीं बढ़ा. बट प्राइवेट में बहुत सारी कम कंपनियां इंडिया में लाइक अडानी टोटल गैस है और एक पीएनजी गैस वगैरह है, लेकिन उसका उतना सप्लाई नहीं है जितना गवर्नमेंट का है. तो आई थिंक 10% लोगों को प्रॉफिट होगा लेकिन 90% लोगों को नुकसान होगा. वो ओवरऑल इकोनॉमी को डाउन करेगा. तो अगर ये वॉर बहुत ज्यादा आगे तक चला तो इट इज डेट्रीमेंटल टू द इकोनॉमी एंड विच इज गोइंग अफेक्टेड. लेकिन अब उसका भी इफेक्ट बहुत ज्यादा मार्केट में आ गया है, ऐसा वी आर थिंकिंग before the meeting. Any next questions or I will continue some questions from your side. Rakesh, are you having questions? Please unmute yourself.
Nothing, not really.
Rakesh is working in public sector company.
Yes. Not really. Things are मतलब unpredictable है. एक दिन up होता है, एक दिन down होता है. So जैसे वो rightly shown in that one slide that like kangaroo, it's so that's okay.
हेलो आशीष सर. हेलो राम कुमार सर. Are you able to hear me?
Ram Kumar sir, Ashish, anyone from Midas? Might be they lost connection. Give some time, they will come back.
Okay.
Hardly 1 or 2 minutes.
Yeah.
थोड़ा नेट का इशू हुआ था बिकॉज 2 दिन से बहुत बारिश हुआ पूना में एंड हैवी थंडर स्टॉर्म, से पावर एंड नेट का कनेक्शन में थोड़ा सा डिस्टरबेंस आया.
Ram Kumar sir,
So Rakesh, you can ask the questions.
yeah, someone is having a question. Go ahead. Chalo, bye.
राम कुमार सर.
Unmute yourself, Rakesh.
चेतन बोल रहा हूँ.
उनको शायद अपना सुनाई नहीं दे रहा है.
No, I don't have any specific question.
Yeah,
Yeah, let us go ahead.
little bit louder.
Mr. Chetan is asking something.
Sir, any views on gold prices?
नहीं बराबर है. Okay, Rakesh, you unmute yourself.
आशीष सर. Ramkumar sir, any view on gold prices? Can you cover that?
Any questions? Otherwise, I will continue.
Sir, can you hear me?
राम कुमार सर, आवाज आ रहा है?
Yes, all right. Yeah, we can hear you.
Sir, any view on gold prices? Can you cover that too?
Yeah. So, one question from the audience is about the gold has gone up and now corrected little bit. Silver has corrected around 30%, but gold has corrected around 50 to 20%. So, what is the outlook for gold and silver?
So, the basic premise on which gold has done well was the realization that whatever the US has been doing, whatever whatever thesis we showed on the slides, that the US is in trouble, and one of the ways they can get out of the debt situation is by devaluing the dollar. So, आपने एक डॉलर वैल्यू पे आज का उसका डेट पेग्ड है. इफ द डॉलर गेट्स डिवैल्यूड, योर पे आउट रिक्वायरमेंट गेट्स लोअर. So US has been trying to devalue the dollar against the basket of currencies, and and secondly, the trust on the US and the dollar, that has been going down, especially after they've confiscated the Russia's holdings in the treasury. It was made to zero. So the trust on US as a reserve currency, dollar as a reserve currency, was going down. So the world was seeing कि boss, dollar का alternative क्या है? Because you can't buy yuan. It's not a trustable country and currency. And there is no other actually alternative to dollar as of now, because it's the reserve currency. It will take some long time for some other currency to come up which is accepted as a reserve currency. But as of now, there seems to be no alternative. And in such a scenario, what happens that precious metals take the center stage in terms of buying, because people or central banks. So if you see RBI or other central banks, they have been buying gold, and the US Treasury buying has been at the lowest, and actually it's been that the gold holdings of across the board has been much more, and it has become more than the US dollar holdings. So this transition led to buying of gold and silver. Gold is a primarily preferred asset by central banks, and some Middle Eastern countries reserve banks also bought silver, and that's where the game turned for silver. Plus, there is a historical correlation between gold and silver, that whatever is the price of gold, something like 2%, 3% is what the price of silver is. That correlation got broken when gold was rising and silver was not. And then silver also caught up like a small cap. When a large cap goes higher, the small cap is the last one to catch up. So something like that happened. You saw euphoria around January, and thereafter, after the euphoria, a lot of selling also took place because the rise in gold was high. But at the same time, what I would say is that the underlying thesis for buying gold, that US is in trouble, and probably this story will continue for another few years, where the fight for the new reserve currency is going to be there, and dollar is not a trusted asset to hold. So that thesis remains, and that's why gold has to be in portfolios. It will do well over a reasonably longer period of time. But the fact is that it can't be expected how periodically it will perform. But over a reasonably long period of time, we see a case for gold to be in the portfolios at a reasonable level. So maybe a 5-10% gold is good enough, and that's where we are. So immediately there was a boom. There is kind of a correction, but at the same time, it does not lose the merit on which people are buying gold. So one needs to hold on to gold as a percentage of their overall portfolio to a reasonable extent. That would be my call.
I have one question from the audience side. In one of your slide, we have seen that the Nifty has gone down around 15 to 16% from the top, and the portfolio or median of the market has come down around 28% to 30%. And as we have experienced last 20 years also, that the portfolio return is always going down compared to the index is going down. And the research has always published that the individual portfolio is going more down than the indices. And during the downfall, people are always advocating that you should hold the index fund or the ETF rather than buying some active fund or PMS. Why it is happening so? At the same time, when the market is in the bull market, the PMS or mutual fund is outperforming the index. But the downside, it is having more pain, and that's why we are advising a lot of my close friends that don't buy the stocks, buy some funds or buy some index fund. And why it is happening so, and it is again repeating. Audience, have you understand my question? My question is that आज जिनके पास भी पोर्टफोलियो है, उनके पास जो खुद के स्टॉक खरीदे हुए हैं, डायरेक्टली विदाउट आस्किंग टू समबडी और विदाउट टेकिंग एनी एडवाइजरी, अपना पोर्टफोलियो ज्यादा नीचे गिरता है कंपेयर टू द इंडेक्स. इंडेक्स मीन्स निफ्टी. अगर अपन देखते हैं निफ्टी में अभी आज भी ईयर एंड के हिसाब से अगर हम देखते हैं तो ईयर एंड के हिसाब से 4-5% डाउन है. लेकिन अगर हम खुद के पोर्टफोलियो देखते हैं जहां पर हमने स्टॉक खरीदे हुए हैं, वो उसमें करीब करीब कोई कोई स्टॉक 50% घट जाता है, कोई कोई स्टॉक 20-30% घट जाता है. ओवरऑल पोर्टफोलियो जिनके पास भी डायरेक्ट शेयर का स्टॉक पोर्टफोलियो है विच इज गोइंग डाउन अराउंड 32%. दैट इज शोन इन द स्लाइड आल्सो. Why it is like that?
Yeah. So very pertinent question. I mean, ये सबने देखा है कि हमारे पोर्टफोलियोज का ड्रॉडाउन बहुत ज्यादा होता है वर्सेस इंडेक्स. अभी इसमें हमने जो अभी इंडेक्स दिखाया था, इफ वी कैन पुल आउट दैट स्लाइड अगेन मे बी, द एनएसई 500 वाला जो,
Slide
so that it gives the context.
Yeah. Yeah, this one. ये तो मिड कैप स्मॉल कैप का है.
हाँ,
ये जो
ये ऊपर हो जो
चार्ट है
चार्ट है.
ना, इसको थोड़ा जूम करो.
Yes.
Yeah. So this is my question to him. That you see the Nifty is down from the top is around 14%, and the portfolio is around median. Median मतलब पूरे मार्केट का पोर्टफोलियो की बात कर रहे हैं. पूरे मार्केट का पोर्टफोलियो जो है वो करीब करीब 30% डाउन हुआ है. मतलब जिसमें मिड कैप एंड स्मॉल कैप ज्यादा है. तो प्लीज एक्सप्लेन दिस स्लाइड.
So yeah. So going.
Yeah.
Yeah. So इसमें एक दो रीजंस है. वन इज दैट अगर आप एनएससी 500 भी देखोगे उसमें वेटेज ऑफ लार्जर कंपनीज अराउंड 70% प्लस, क्योंकि ये मार्केट कैप वेटेड इंडेक्स होते हैं. सो इसमें अगर और ओवरऑल मार्केट देखो तो नंबर ऑफ स्टॉक्स इन स्मॉल कैप्स एंड मिड कैप्स आर मच मोर देन लार्ज कैप्स. सो ये थोड़ा सा टिल्टेड होता है, इन थोड़ा नहीं बहुत ज्यादा टिल्टेड होता है इन टर्म्स ऑफ लार्जर कंपनीज. एंड एज यू नो दैट larger companies are the last ones to fall, typically in a fall. And that's why the fall in the index is much lower versus the general, क्योंकि हमारे आपके portfolios में mid cap and small cap बहुत ज्यादा होंगे versus the large cap. There are very few people who don't get excited to the growth that probably a small company or a mid cap company is likely to give. And the data is also that कि smaller companies give a lot of volatility, but at the same time they have been proven to, if you can time the cycle well, they create wealth. So that is one important reason that 70% of Nifty 500 is also large caps. So that's the difference between typically across the market 1000 crore plus market cap में 30% 30% of drawdown has come. Stocks have fallen by 50-70% also. Micro cap में तो और भी problems है. So this is why the difference is. Second is typically when individuals build a portfolio, it is stock. It is not the sector rotation that happens in the index, because if you have just recent past last 3-4 months mein, sometimes you would have banks going up, sometimes you would have some energy related companies ensuring that the index is there. So money keeps on moving within small large caps in a fashion where it is very difficult for individuals to take calls ki अगले महीने या कौन सा सेक्टर चलेगा. So that also ensures that sometimes if SBI was lifting the market, some other time some other index was lifting the market. That does not happen in case of individual portfolios, because all these are, and एलोकेशंस इन टर्म्स ऑफ वेटेजेस सबके डिस्प्रोपोर्शनेट होते हैं. मतलब जब हम बुल मार्केट में लेने बैठते हैं स्टॉक्स तो हम एलोकेशंस भूल जाते हैं. So that is another reason. So these are the reasons why index which is weighted in large caps, and secondly the sector rotations, third is the allocations. I think these 2-3 reasons happen because of which typical portfolio performance is very wild versus the index.
Yeah, thank you, Mana. Any more questions? Any more questions, or I have only two questions left on behalf of the audience itself? Or some questions may be not covered by audience. I'm expecting that from the audience side the questions would come, so I can reduce my questions. Rakesh, are you having any question?
नो क्वेश्चंस. अभी तो मतलब टाइम ही ऐसा है कि ऐसा लगता
अनम्यूट
है चुपचाप
थोड़ा
शांति
सा
से बैठे
जोर से
रहो.
अनम्यूट करो. अनम्यूट अनम्यूट तो है शायद, सुनाई नहीं दे रहा है, लेकिन
क्या?
आवाज नहीं आ रही राकेश.
एम आई ऑडिबल? नो.
नहीं, ऑडियंस थोड़ा सा ऑडियो ऑडियो बड़ा करो आपका.
सर आवाज आ रहा है उनका.
आवाज आ रहा है उनका. यस, वी कैन हियर यू राकेश सर.
या.
Okay, so I have one
Ashish,
more
if you
questions. That
Ashish, if you able
have you seen
to,
the market movement yesterday? That someday market Nifty is going down by 600 points. Another day, or maybe ceasefire maybe happens. So another day, Nifty has again go up by 600 points. Yesterday was the day when Nifty has gone down around 450 points, and suddenly at the second half of the day, the whole Nifty has recovered, even Bank Nifty has also recovered. I have read one news that SEBI has allowed the promoter and promoter company to buy back their own share from the open market. You may be remember these are the regulatory compliances. So you may be remember that last 1 year before, SEBI has not allowed the promoter or the company to buy back their own share from the open market. They buy back from the टेंडर रूट. जैसे आपने टीसीएस का बाईबैक देखा होगा, तो बाईबैक में they have to be take permissions from SEBI, submit the proposal, and then they have to be come out from the tender route. Then public has to be submit their share to buyback. अगर आपने 100 शेयर बाईबैक के लिए भेजे तो उसमें से 10 शेयर बाईबैक होते हैं. But yesterday the FICCI and CI and other industries body have asked the SEBI that the market is falling on the one side and the retail investor is losing the money, as well as the dollar is going up very highly. So they have suggested the SEBI that you should allow the company to be buy back their own share, even though the some companies having cash rich company, and they find that their stock price has gone down by 40-50%, as you say, in micro cap and mid cap company. So SEBI has allowed on the 1st of the April, the new rule has come that these company can buy back their own share from the open market, even though they may need some board resolution and other things. But yes, the timeline may be reduced. And I think this effect has come immediately from the market. So your view on that, on the buyback of by the companies from the open market?
Yeah, so see, it is always a welcome move when the regulator eases down regulations, especially in these kind of markets. What we've seen that the promoters are interested in increasing their stake in their companies because growth is still very good in most of the pockets. I mean, majority of the industries are going through a growth phase, and thanks to the government also, where they've done a lot of work in the last 10 years in terms of pushing agenda of growth across sectors. So when the stocks fall by say 40, 50, 60%, it makes sense for the promoters to buy, and this easing will help definitely the promoters to buy into stocks. So it's a very very welcome move. Secondly, we have seen rights issues being planned by quite a few companies. If you see the list of rights, then promoters are interested in increasing their weight by putting money. That is another thing that one can understand. As you said, the tender route is a bit longish route. If there is an automatic route for allowing the promoters to buy, it gives a stability to overall expectations on stock prices, and it's a welcome move from market participants' point of view.
Yeah, and recently RBI has also come out with a regulation that in the forward market and the speculative market, the people should not be play, especially the banks should not have the huge positions in dollar against the rupee, because during the crisis, some investor or some HNI or some institutions are taking the advantage of the sliding the rupee. So RBI has asked all the banks, I think so, to cover up their positions to the 1st of April, and that's why also the dollar has or rupee has appreciated in the last week, 2 week in the top 5. So rupee has recovered last 2 week due to the RBI actions. Your thought on that?
Yes, so rupee has been a problem from various angles, because a depreciation of your currency by 14% means a lot in terms of how the country, which is dependent on imports, manages its overall or the finances. So, and the FIs have also been worried, because when the rupee slides, so though they might be a cause also that they are selling, and the banks, as you said, the institutions are there to make money, right, from the treasuries. So they'll take short positions on the rupee, and the currency keeps on depreciating. So RBI, which typically tries to manage the currency, it becomes very difficult for the regulator when such things happen. And it's a very welcome step by the RBI to ensure that some steps are taken that the rupee does not slide the way it has. We've let the situation go out of hand on the rupee, and which has hit us badly, especially in these times when the imports are becoming doubly costly, right? So it's a welcome move if the rupee, and actually if I was reading some economists' view that the actual theoretical value of the rupee is not 95, it is something lower. It had to be lower, but since it was not managed well, and there was selling going on, there was speculation going on, things went out of control in terms of rupee, because the dollar had fallen against the other currencies, but the rupee had fallen against the dollar. So it's a dual impact when it is compared to a basket of other currencies. So it's a very important thing. If rupee comes back from even from 95 to 90, it helps everything from the fiscal position point of view, and FIs taking or foreign institution getting a breather in terms of thinking ki my positions will not be diluted when I. So I was speaking to one of the clients with a big family office. Their view had been that rupee will cross 100. This was, I think, more than a year back, and accordingly those family offices thought of कि भाई हम लोग यहाँ मेहनत करके पैसा कमाएंगे, and then rupee depreciation adds to about 10% of that. If we are sitting outside and investing in India in dollar terms, our returns double. If our returns can double that way, कि rupee depreciation खाने मिलेगा मुझे करके. So these are the thought processes that are happening. Plus we have taxed the FIs, right? India is the only country which has taxed FIs, and that is where the entire game from the government angle also has gone wrong. That no other country taxes the capital gains for FIs, but India taxes. And from that point of view, also it hurts when the valuations are high or when the country is not doing good. It is a problem. So government has to think also from the taxation point of view, what the demand of the capital market is. Hopefully something happens in the next budget or something interim, because that will give a kicker to the money flow on FI FDI angle, foreign money angle. That's a very big negative that we have come now.
One question come from Shrutika Vani. She's asking about the rebalancing of portfolio, starting the SIP and changing of the funds. So I can give that answer. Shrutika, the mutual funds generally we are holding, it is we do the for long term SIP like 5 year, 3 year, 7 year. So we cannot do like 3 month में SIP बंद करो फिर चालू करो. तो हम लोग म्यूचुअल फंड्स में जब SIP करते हैं तो म्यूचुअल फंड में जो स्टॉक्स होते हैं वो फंड मैनेजर इटसेल्फ इज चेंजिंग द सेक्टर, फंड मैनेजर इटसेल्फ चेंजिंग द स्टॉक्स. तो अगर हम अपने साइड से अगर फ्रिक्वेंटली चेंज करेंगे तो फंड मैनेजर क्या करेगा? तो आपका जो क्वेश्चन है वो स्टॉक पोर्टफोलियो के लिए बराबर है, बट म्यूचुअल फंड्स के लिए हम लोग कोई भी चीज जब लेते हैं तो 3 से 5 साल के लिए लेते हैं. हाँ, कोई 2 साल में कोई बहुत ज्यादा फर्क आ गया कोई सेक्टर्स में या कोई पॉलिसी चेंज हो गई है तो उसमें भी हम म्यूचुअल फंड्स में रीबैलेंसिंग करते हैं. रीबैलेंसिंग या हम स्विचिंग वगैरह करवाते हैं। बट म्यूचुअल फंड इज नॉट लाइक ए ट्रेडिंग इंस्ट्रूमेंट। ट्रेडिंग इंस्ट्रूमेंट जो होता है वो पीएमएस में होता है, जो फंड मैनेजर खुद करता है। एडवाइजरी प्रोडक्ट में होता है जहां पर फंड मैनेजर खुद भी स्टॉक चेंज करता है। तो आप कभी भी किसी कंपनी की फैक्ट शीट देखोगे तो उसमें जो 6 महीने पहले जो स्टॉक्स थे वो 6 महीने के बाद ऑलरेडी चेंज हो जाते हैं। सो आउटसाइड your mutual fund portfolio, the stocks in that mutual fund is already changed by the fund manager। तो हम लोग अपने एंड से चेंज नहीं करते। दूसरी बात होती है, जब हम कुछ भी चेंज करते हैं उसके अंदर में एग्जिट लोड और कैपिटल गेन भी एक बहुत बड़ा पार्ट होता है। तो फ्रिक्वेंटली अगर हम चेंज करेंगे तो आपको टैक्सेशन और एग्जिट लोड की वजह से ट्रांजेक्शनल कॉस्ट बढ़ जाती है। एंड एट द वन टाइम पीपल आर सेइंग कि आप ट्रांजेक्शन ज्यादा करते हो तो शायद ब्रोकरेज ज्यादा कमाते होंगे। तो ये उल्टा होता है। इसे नेगेटिव इम्पैक्ट फ्रॉम द सेबी साइड और फ्रॉम द रेगुलेटर साइड कि आप फ्रिक्वेंटली पोर्टफोलियो चेंज क्यों कर रहे हो, विच इज इम्पैक्टिंग द इन्वेस्टर्स फॉर द ट्रांजेक्शनल कॉस्ट इंक्रीजेज। तो इसको हम 1 to 1 भी आपको समझा देंगे। ये प्लेटफॉर्म पे आपका जो क्वेश्चन है, क्वेश्चन बहुत अच्छा है, लेकिन म्यूचुअल फंड्स और स्टॉक के लिए दोनों के लिए स्ट्रेटेजी अलग अलग होती है। सो आई थिंक आई हैव गिवन योर आंसर, बट 1 to 1 भी हम आपको ये चीज थोड़ा सा बता देंगे। माई लास्ट क्वेश्चन अबाउट द एफआई आउटफ्लो एंड द डीआई इनफ्लो। तो हम जो देख रहे हैं 2-3 साल से कि जितना एफआई सेल कर रहा है उसके बराबर करीब करीब डीआई बाई भी करता है। जैसे परसों के दिन जब वॉर का सीज फायर अनाउंस हुआ, तभी वॉर के सीज फायर में निफ्टी करीब करीब 550 पॉइंट ऊपर गया था। जब हमने रात को फिगर देखा तो एफआई ने करीब करीब 11,000 करोड़ का सेल किया था और डीआई ने करीब करीब 12,000 करोड़ का बाइंग किया था। अब एक दिन में जितना एफआई सेल कर रहा है उतना ही डीआई बाई कर रहा है, फिर भी मार्केट बढ़ा क्यों नहीं? या जिस दिन डीआई बाई करता है और एफआई सेल करता है तो उस दिन मार्केट 600 पॉइंट नीचे क्यों जाता है? तो इज देयर एनी वेरी शॉर्ट, कोई तो एचएनआई या कोई पीआई जो बोलते हैं मतलब एफआई या एफपीआई वो मार्केट को शॉर्ट कर रहे हैं क्या, या फिर कुछ अलग फोर्सेस हैं जो मार्केट को नीचे लाते हैं? क्योंकि लास्ट के 2-3 इयर्स में व्हाट इज द गोइंग इन द मार्केट और इन द टीवी कि हम लोग एज ए इंडिविजुअल इन्वेस्टर्स और एज ए एसआईपी जिन्होंने की हुई है, तो क्या हम उन एफआई को फंडिंग कर रहे हैं कि वो लोग ऊपर में बेच रहे हैं और हम आके नीचे खरीद लेते हैं? तो अभी लास्ट के 2 महीने में ये बहस चालू हो गई है कि आर बी गिविंग द एग्जिट रूट टू द एफआई, क्योंकि वो लोग सेल कर रहे हैं, हम लोग बाई कर रहे हैं और मार्केट गिरते जा रहा है। तो अगर वो सेल कर रहे हैं, हम लोग बाई कर रहे हैं, तो गिरना नहीं चाहिए, मार्केट शुड बी स्टेबल। तो ये थोड़ा सा एक घोष के जैसा काम कर रहा है मार्केट में। इज एनी अदर फोर्स इज वर्किंग ऑन दैट?
So, see, net FI have been sellers. The data says that last 5 years we've seen only net negative from FI angle on the overall cash market. And last 1 year, the selling has just aggravated. I mean, the numbers have gone from some few thousand crores to few lakh crores. And March was typically a bad month where I think more than 1,80,000, 1 lakh, more than 1,50,000 crores of selling that happened on the FI side. So FIs have been on exit route. And the problem, as I said, that one, valuation, second, we are not in AI, some other industries, some other countries would benefit. So data suggests that um, the semiconductor or data center backed backed economies, those had a very good time last year. India did not have a good time because it was seen as anti-AI. We don't have much of a play in AI as such. So Korea was up by 120%, or some China was up by. But these are the things that happen, right? I mean, if it so the expectation was that if after 1.5-2 years of issue as far as performance, there is zero, there is a there is no positive contribution, things should improve now. That was the expectation. And at that particular juncture where the market was positioned in terms of picking up, this war happened. So this event has just delayed the recovery of the market. That's what I think. And DIs have been buyers because that's the money flow that they have, and many mutual funds have been sitting on cash also. So institutions typically give a supporting hand to the overall market, and so there would be big shorts also in the market. So the volume with which the selling happens, that also matters. especially if we don't talk only of the large caps, but in certain small and mid caps, what we have been seeing is the stocks have been falling just because incremental buyer was not there. Even if someone had to sell some quantities, that had to be at lower and lower and lower prices, because of which the entire small cap basket has just taken a beating. Because there the mutual fund support is not as much. The mutual funds are not as much participative. So in different pockets, that's been the case. But actually, as investors, we should go by fundamentals mostly. See, when the TG happened, it was because of the domestics. Most of us would have made decent money. FIs are not there since FY21 on net basis. But we've seen a rally. We've made money till 2024, and then the fall happened. So net we are still in the money. And I am of the opinion that FIs allocate money based on the options that they have here and there. It is better that, and the domestics will typically support the market going ahead as well. Because FIs are hot money. I mean, they'll come, they'll go, they'll try to find, like hedge funds, they'll try to find alternatives somewhere. So to dissect that data on a very day-to-day basis may not be my choice, but my choice will be key in my economy where the companies are high growth and available at reasonable valuation. It makes all the sense to participate. See, a lot of wealth creation has happened in India over the last 20 years. I mean, we have all been party to it in terms of making wealth. And there is no reason why over the next 20 years we will not grow. As an economy, we are much behind of the developed markets. So that growth of 10-11% kind of nominal GDP growth and similar profit growth of corporates, that will come. And accordingly, in these cycles of valuation and liquidity, markets will find their own path. So as investors, it's our job to be part of the entire journey. There is nothing much lost. The near term always takes a toll on our minds, but reasonable, medium and long term, I don't see a challenge why Indian corporates will not make money for us.
And lastly, yesterday, government has reduced some import duty on some of the products, and government has taken a hit of around 1,800 crores to support the Indian industry. So government, I think, also concerned about the going market down. So they have first take the toll on dollar, and then now the inflation. So because some item has get costly and government has reduced the duty so that our SME sector or some small scale sector should not have the pricing pressure on their import components. So, your view on that? Yesterday night, I think government has reduced the import duty on some of the products and take 1,800 crores as a hit, and this may be stabilize the economy. I think so.
Yeah. So incrementally, the thinking from the government has been to reduce the taxation and the hurdles wherever possible, because they don't want inflation to go up to an extent where things are unmanageable, or growth to slow down to that extent. So they've been trying all sorts of things on the geopolitical angle, on the fiscal side. So it is very pertinent that when prices of your raw material shoot off, or crude has gone so much high, that the government reduces. These are the times when the government has to reduce its share of the money, and it has to give something to the economy and industry. So that stress on the fisc will remain, but these are all temporary measures to support the economy. The way the developed world or US had done, they had additional lever of printing money and giving it in the hands, and always they went that way. India does not go that way. India always has been measured in terms of what levers they can operate in the short and long term. So it's a very welcome in kind of scenario where the government actually is with the industry, because they are listening, they are in listening mode always, and they know what things are going where. So if you see, all the steps have been towards ensuring the top priorities are taken care of. I mean, as we spoke, कि पहले infrastructure focus था, but जब defense की बात आई कि first we need to be good at defense, the allocation there moved, and infrastructure took marginal backseat. So these things are there, and we will see these things happening, because in the next 1 or 2 quarters, the government will have to take those measures to ease off the pressure on industry and the common man. I think if the war in that aspect takes a subsides, it will be much, much more beneficial. So we are there. I mean, the stock prices have also reacted as we discussed in the general conversation. So let's see how this pain period goes. And we have to be with the market and with the companies overall to benefit when things come back to normal.
Yeah, we can take one or two questions and then we will summarize the today presentations. Yeah. Is anyone have any questions? Please unmute yourself or put up the on chat board. Any questions? Yeah, I have a structure. Already. So I have also having experience of 20 to 25 years experience and see 2-3 bull market and 2-3 bear market also. तो तीन चीजें मुझे समझ में आती हैं एज ए लेमैन और एज ए कॉमन पर्सन. टाइम करेक्शन 2 ईयर का हो गया मार्केट को. प्राइस करेक्शन जो नहीं हुआ था अभी 2-3 महीने पहले, वो एक प्राइस करेक्शन भी बहुत हैविली हो गया, करीब करीब 15 to 20%. जब जब अभी गवर्नमेंट भी इंटरवेंशन कर रही है, जैसे हमने बताया डॉलर के लिए गवर्नमेंट आगे आई है, कल के दिन इंपोर्ट ड्यूटी कम की है. तो जब जब कोई बहुत ज्यादा हार्ड हिट होता है और चारों तरफ से फोर्सेस काम करने लगते हैं, दैट वी कैन सी एज ए नियर टू द बॉटम ऑफ द मार्केट. मार्केट कभी आपको बोल के नहीं आएगा कि बॉटम आ गया और मुझे खरीदी कर लो, लेकिन एक्सपीरियंस कैन टेल यू. तो ये मेरा पर्सनल एक्सपीरियंस है कि जब एक एक करके सब लोग मतलब मैदान में उतरने लगते हैं कि भाई ठीक है, इससे ठीक नहीं हो रहा तो ये करेंगे, इससे ठीक नहीं हो रहा तो ये करेंगे, अभी से ठीक नहीं हो रहा तो इम्पोर्ट ड्यूटी कम करेंगे. तो ये सब चीजें इम्पेडेशन दे रहा है कि अब मार्केट में गवर्नमेंट को भी चिंता हो रही है और आरबीआई को भी चिंता हो रही है कि ये इसी टाइप से अगर सेल होते रहेगा तो एक बार कॉन्फिडेंस अगर रिटेल इन्वेस्टर का गया तो शायद और भी प्रॉब्लम होगा, एंड विच कैन हैम्पर द मनी रेजिंग फ्रॉम द मार्केट ऑल्सो. और अगर आप देखोगे कि लास्ट के 2 ईयर में बहुत सारे लोगों को लॉन्ग टर्म कैपिटल गेन आया, गवर्नमेंट को बहुत सारा टैक्स मिला. अब इस साल किसी को कैपिटल गेन ही नहीं. तो ये सब चीजों के इफेक्ट अभी धीरे धीरे रिपरकेशंस आता है मार्केट में, और ये मेरा पर्सनल एक्सपीरियंस मैं शेयर कर रहा हूँ आपको. तो कभी भी मार्केट आपको वन वे में नहीं आएगा कि नाउ आई एम एन द चीपेस्ट रेट एंड यू बाय फॉर मी. लेकिन ये इंडिकेशंस दिखा रहा है मार्केट में. और ये कैसा होता है कि मार्केट अगर जैसे ही 5-6% चल जाता है, देन पीपल गेट कंफर्टेबल के ओके नाउ आई कैन बाय. तो मार्केट में मैंने 2-3 बार मीटिंग में भी बताया कि जब जब हाईएस्ट क्राइसिस आती है तभी तभी हाईएस्ट रिटर्न बनते हैं मार्केट में. जो भी कोरोना के टाइम में आए उनका आज भी पोर्टफोलियो प्लस में है, 7-8% सीएजीआर अभी भी है उनका. लेकिन जो लोग 2 साल पहले आए कि कंफर्टेबल मार्केट है, मार्केट इज इन कंफर्टेबल, कोई प्रॉब्लम नहीं, कहाँ भी कोई प्रॉब्लम नहीं है, दीज पोर्टफोलियो इज नाउ डाउन. तो ये मेरा एक समराइज वे है कि एक कॉमन सेंस भी अपना होता है. कॉमन सेंस ये बोल रहा है कि टाइम करेक्शन, प्राइस करेक्शन एंड गवर्नमेंट इंटरवेंशन इज कमिंग. दीज आर द मे बी द नियर बाई पॉइंट्स. इट विल टेक टेक्निकली ऑल्सो. वन ऑफ माई फ्रेंड्स इज के 4,000 पॉइंट 4,500 पॉइंट का निफ्टी में करेक्शन आ गया. तो अगर हम टेक्निकली भी देखेंगे तो कोई भी चीज 100 रुपए गिरती है तो उसका बाउंस बैक भी करीब करीब 30% आता है. तो ये वो भी एक कारण है कि टेक्निकली भी मार्केट इज ओवरसोल्ड. So it can be bounce back even though not a long term bull market, but bear market का bounce back भी तो आना चाहिए. और अगर वहां से फिर मार्केट चल गया, थोड़ी सी थिंग्स गेट इम्प्रूव, तो शायद मार्केट आगे चल जाएगा. So this is from my side. Thank you for attending the today presentations. We are on our Google business page. If you have some time, little bit 10 seconds, please scan our QR code and give the review on us. We are having on the Google business page, we are sharing our code. You can scan that code and give the review of our company. So this is the QR code. Please scan it and give your feedbacks and review to us. We are number 1 in Maharashtra and Pune for stock advisory and portfolio management and financial planning. Generally, we don't talk only any stock picking or some mutual funds. We are not selling any single company portfolio. We are in the financial planning and goal-based financial planning. So one-to-one, we cannot give the ideas. We can have one-to-one talk. We take the interview, and according to that customized portfolio we are making. Thank you very much. Please scan the code and give your reviews on us. Thank you very much. And next 30 seconds, we are closing our sessions. Thank you, Ashish, for being with us on this Saturday.
Thank you so much. It was a pleasure talking to the audience. Thank you so
Yeah,
much.
great work, Ram and team. Thank you.
Thank you, Sudhin, for being with us. We are trying to update our friends and customer. Not here is not all customer are there. Some friends are also there. Some competitors are also there. So we are just keeping update to our friends and clients. It's not always for the clients. And we have the unwise. जो भी स्टॉक के बारे में हम लोगों ने बात की उसमें हमारा कोई होल्डिंग भी हो सकता है, लेकिन अनड्यू एडवांटेज हम लोग कभी भी नहीं लेते हैं। ऐसा नहीं है कि जो चीज हमने पहले खरीदी हुई और आपको बताने के बाद हम बेचेंगे। तो पंप एंड डंप एंड ऑल द स्टडीज जो टीवी पे या यूट्यूब वगैरह पे दिखते हैं वो सब हम लोग बिल्कुल भी नहीं करते। इनफैक्ट पहले हम लोग बाई करेंगे, बाद में आपको बोलेंगे बाई करो, पहले आपको बोलेंगे बेचने को, बाद में हम बेचेंगे। तो उसमें 100% ट्रांसपेरेंसी वी आर कीपिंग। Thank you very much for with us. And within that 10 seconds, please scan the QR code and then we will close the meeting. And we will available this recording to एक फिल्टर करके हम लोग रिकॉर्डिंग भी रखेंगे। अगर आपने किसी ने मिस कर दिया या किसी फ्रेंड्स को शेयर करना है या फैमिली में किसी को शेयर करना है तो एडिटेड वर्जन वी विल शेयर विथ यू आफ्टर सम टाइम। थैंक यू वेरी मच। We are ending the meeting. Thank you very much again. Please end the meeting.